Hi, this is Yahoo. I'm a option trader. Today is February 27, 2026. It's 8:24 a.m. Japan time. Let's look at the Japanese market first. Since yesterday, we are in a market retrograde and it will continue until March 21. From a planetary perspective, this is an interesting period. So I'll keep that in mind as we move forward. Yesterday, the Nikkei closed at 58753 yen. At one point, it almost touched 60000, but that 60000 level looks very strong. The wall is thick. Advancing stocks have been very strong for three consecutive days. More than 2,000 stocks were up. Trading volume has also been over 5 trillion yen for 3 straight days. The market is clearly active. The volatility index went back up to 31.21. On the 25, it was in the 26 range, so it bounced a bit. PER is 20.63 times. BPS for the Nikkei is 2847 yen. Overall, the Japanese market looks very strong. The 30-year bond yield is terrible at 3.34%. USD JPY is around 156.12. It does not look like it's trying to test 160 point anytime soon. So for now, Japan is still the main character in the global market. Now let's look at the US. The S&P is at 6909 momentum, feels slightly weak. VIX is 18.64, not big move. Compared to the US, Japan clearly looks stronger. Move index is around 64, not much panic in bonds. Gold is at $5185 and recovering a bit. GBZ is around 33. So this recovery in gold does not look like panic buying. It looks more like real demand. Bitcoin is at $67561, staying in the 67000 range. So overall, Japanese is too strong. Now about AI. We are seeing more new about Anthropic and AI in general. NVIDIA earnings are also coming. AI is clearly changing things. Some jobs are disappearing. Some business are being transformed. SaaS companies are under the pressure, but not all AIs, all SaaS is useless. If a company already has customers and a strong network, that was value. The question is whether they can do more than just basic SaaS. Still, we are in a period of selection. Some companies will survive, some won't. This is not an easy time for high valuations. AI is good for humanity long term, but in that short term, big change creates fear, and fear can hurt stock price. There are also headlines about Trump tariff and geopolitical risk, but honestly, those feels like small noise right now. The real story is AI productivity shock. In the US, it's getting harder for new graduates to find jobs, but I actually think this could be a big opportunity for young people. People who already have jobs spend most of their time working. Young people, even if they don't have high income yet, have time and they have access to massive amounts of data. If they use that time wisely, they can build a new kind of business. I think data interpretation business will grow. People who can read the data and create a meaning from it will win. So in the long term, this change may not be negative at all. Now, about my model. Recently, liquidity was getting thinner and unrealized profit was decreasing. But with this rally toward 60000, we are seeing some recovery. The question is unrealized profit starting to rise again, or is this a trap? Fear indicator still declining, so we need to watch carefully what kind of the future the market is pricing in. Since the Trump tariff shock, Japanese stock have had one of the biggest rallies in the last 20 years. This feels a bit like a chicken race. Money may be flowing from the US into the Japan because the US market looks weaker. So we ride the rally, but we stay aware. It could turn on any time. That's it all for today. If you write this kind of perspective from my contents, think of it as buying a long boot for your mind. See you tomorrow.